Just coming in here, viewer, the Adani Group follow-on public offer has been cancelled and money is all set to be returned to investors in a late-breaking story that India Today is bringing to you at this time. We're breaking the big story. The Adani FPO that was fully subscribed, that managed to sail through yesterday, has now been cancelled by the Adani Group. I have in front of me a press statement by the Adani Group that has just gone out to the National Stock Exchange of India Limited, saying the board of directors of the company at its meeting held today, that is February the 1st, 2023, has decided in the interest of its subscribers not to proceed with the further public offer or FPO of equity shares aggregating up to 20,000 crore of face value of ₹1 each on partly paid up basis, which was fully subscribed. Now I'm going to read out the media statement that the Adani Group has just put out. We'll have the Business Today team live with us here on India Today in just a moment as we bring you this very, very crucial and all-important breaking business story. The Adani Group, which has been under a cloud, remember, after the Hindenburg research report that came out on January the 24th, has seen a bloodbath as far as Adani stocks are concerned, including today on budget day, and a day after that further public offer of 20,000 crore, which was fully subscribed. The Adani Group has taken the decision to cancel the FPO and return money to all investors. I'm reading out from the press statement that's just come out. India Today has accessed that full press statement. It says, the board of Adani Enterprises Limited, AEL, has decided not to go ahead with the fully subscribed follow-on public offer or FPO. Given the unprecedented situation and the current market volatility, the company aims to protect the interest of its investing community by returning the FPO proceeds and withdraws the completed transaction. Quoting Gautam Adani, chairman of Adani Enterprises Limited, this press release says, the board takes this opportunity to thank all investors for your support and commitment to our FPO. The subscription for the FPO closed successfully yesterday. Despite the volatility in the stock over the last week, your faith and belief in the company, its business and its management has been extremely reassuring and humbling. Thank you. However, today the market has been unprecedented and our stock price has fluctuated over the course of the day. Given these extraordinary circumstances, the company's board felt that going ahead with the issue will not be morally correct. It's a moral decision, is what the Adani Group is saying while cancelling this FPO to return the money to the investors. Gautam Adani goes on to say the interest of investors is paramount, and hence to insulate them from any potential financial losses, the board has decided not to go ahead with the IPO. So the FPO stands cancelled, and all proceeds, the transactions are cancelled. Money will be returned forthwith to all investors. So that's the big breaking story. That's the bottom line of this decision that's just been taken. For those who have invested, listen to this very, very carefully, because this is important. It says, we are working with our book running lead managers to refund the proceeds received by us in escrow and to also release the amounts blocked in your bank accounts for subscription on this issue. Our balance sheet is very healthy, says Gautam Adani, with strong cash flows and secure assets, and we have an impeccable track record of servicing our debt. This decision will not have any impact on our existing operations and future plans. We will continue to focus on long-term value creation, and growth will be managed by internal accruals. Once the market stabilizes, we will review our capital market strategy. We are very confident that we will continue to get your support. Thank you for your trust in us. So that's the big breaking story, viewer, here on India Today. The Adani Group, whose FPO was fully subscribed yesterday, has cancelled its follow-on public offer that was worth 20,000 crore, which has been completely subscribed. Gautam Adani says that the group has taken a moral decision to return all proceeds to all investors, which is going to be happening over the next couple of days because of volatility in the Adani stock. The Adani Group chairman says that this is a moral decision that the group has taken not to proceed with this FPO, to cancel it forthwith and return all proceeds to all investors. He says this is so that any financial losses owing to this volatility in the stock price of the Adani Group's many stocks over the last couple of weeks, and especially today. We've got graphics on our screen that show you what the Adani stock actually looked like today on the Union Budget Day. Has decided to cancel this. I want to go across to News Director Rahul Kanwal, who has led coverage on the Adani story right here on India Today and on Budget Day as well. Rahul, your first comments on this big decision by the Adani Group.
Shiv, I just had an opportunity to speak to sources very close to Mr. Adani, and we tried to get a sense of why this decision has been taken. So I'll give you a flavor of the thinking within the Adani empire in terms of why they've taken this decision. By Gautam Adani himself, I'm told, took the decision to withdraw. He just felt in the manner in which the stock was being hammered was unfair to the investors, that they came into this follow-on public offer at a rate which is much higher than the Adani Enterprises stock price in the market currently. So there was a review meeting which happened where they looked at the manner in which not just Adani Enterprises, which is the key holding company, but the other Adani counters, Adani Ports, Cement, Total Gas, Wilmar, ACC, NDTV, all of them hammered quite badly. And therefore he took a decision saying that this is against my ethics and my values. And that this whole follow-on public offer which came in the way that Gautam Adani and the Adani empire saw it was really to enhance the public flow, to get more retail investors, private investors into the Adani trading trade and give them an opportunity to come in and make some money on the Adani chips, which is essentially originally why. I mean, they of course had no idea what Hindenburg was working on, and that this iceberg would come and hit the Adani ship. But that's the original reason why they came out with this offer. And now they've basically seen that because the FPO closed at a price much higher than the price at which the stock is trading at this moment, and given the political uncertainty, we've already seen what Credit Suisse has said, now how the other major global financial institutions react isn't known either. Therefore, he said, let's just call this off, which is why, from what we're told, this is a decision which the chairman himself took, and he's taken it in a way that, also remember, Gautam Adani is really India, arguably the most ambitious, audacious businessman of this generation. He's dealt with many challenges in the past, and he thinks he can pull this through. Similar things had happened with Dhirubhai Ambani. If you remember, everybody's seen, some of the OTT serials which came out, the manner in which short sellers tried to trip him over. So a lot of people around Gautam Adani say, here's a man who relishes challenges and is willing to take this on. The problem also is that these are very serious charges that have been leveled. The matter will take a political turn. The budget is now over. The Congress is sharpening its knives. The knives will be out for the BJP and for the Adani Group. And that's something which will take a political dimension. And to explain how this FPO closed the price much higher than what the Adani Enterprises stock is trading now would have been complicated. So he said, okay, just chuck it. In any case, we are doing this to try and invite more retail participation. We don't want to do this. We don't want investors to suffer and to lose out on our account.
Rahul, was this always a possibility between yesterday and today after the FPO was, fully subscribed? The volatility in their stock still existed. We saw a lot of that on their, on their counters today as well. Was there always a possibility that something like this would happen?
Earlier it was a matter of prestige and pride in some senses where, if the FPO had failed, it would have been seen as a big financial embarrassment. Through the manner in which Mr. Adani and the Adani companies were able to get participation from, different kinds of family offices and different institutes to come in and support them, they were able to avoid that. In that sense, he's taking this position saying, I could have dealt with it, I have already dealt with it, but despite that, at this moment, I don't want anyone to suffer on my account, and therefore, let's leave it for the moment. We will fight another day. Here's a man who's dealt with adversity, who thinks he can deal with the challenges that Hindenburg has thrown up and all the political uncertainty which we'll see unfold over the next several days, and he thinks he can pull this off. That's essentially what we're seeing at play right now.
Stay with me, Rahul. Also joining us is Saurav Majumdar, editor Business Today, whose team has been leading our coverage on this as well. Saurav, good evening. big decision just announced by the Adani Group. Your comments. What do you think? How are you seeing this?
Yeah, good evening, Shiv. I think this is, of course, unprecedented in that sense because it was a completed issue, and there was a lot of conversation around how he managed to sort of complete the issue in the nick of time and getting in a lot of HNIs, NIIs, and institutional investors to chip in because there was very little retail participation. But you know, at the end of it, I think this decision is also driven by the fact that the manner in which the stocks have been hammered today, and in fact, particularly the Adani Enterprises stock, which took a massive beating across the board. The stocks, of course, have been hammered. But the way in which the Adani Enterprises stock has been hammered, it is also very deeply unfair to the people who have put in money here. Because as a leading industrial house, it will be unfair if the stock takes a further beating over the next few days. Because until the volatility stabilizes, and we know that there is the Hindenburg, the allegations swirling around, and there's a huge amount of volatility around the Adani Group stocks. So obviously, the board, in its wisdom, and Mr. Adani himself would have called, seeing that the investors who have put in the money would be likely to suffer further losses, and that would do irreparable damage to the group just because of the FPO. That was not the aim. The aim is also group's image across the country and the world in that sense, because it's a large conglomerate. He has been till recently the third richest man in the world. So there's a lot at stake for Gautam Adani personally as well. And I think this decision in that sense was taken with this background in mind.
What does this do? Does this kind of stem the bleeding, so to speak, as far as the Adani Group is concerned? Rahul, I want to put that question to you. Is this kind of damage control? Okay, Rahul is not with us. Saurabh, that question to you. Does this in some way, control some of the damage that's been happening over the last couple of days? And the Adani Group decided they needed to take this decision, because things might actually get worse on this?
Shiv, I completely agree. It is indeed a damage control decision, no doubt. There is no doubt about that, because the stock is so volatile and so badly battered that one really never knows what will happen once trading reopens. So if you can see on the screen also, the Adani pack is completely in a sea of red. So therefore, it had to be done in that sense. Probably it's a bold move, it's a brave move, it's a move to assuage the shareholders, particularly those. And remember, day before yesterday, a $400 million check came in from one of the group's partners, and that is something which again, there is this whole question of the image of the Adani Group. You had Abu Dhabi's IHC coming in with a big check. There's a lot of family offices which are believed to have put in money in the FPO. There are large institutional investors who have put in. Of course, retail and employees haven't come in that big number at all. But the fact of the matter is, there was a very real fear and a real and present danger that tomorrow again there would be something, and there would be a serious erosion of value in the stocks. So I think it was a decision taken. It's a wise move in that sense. It's a bold move for sure. And he will live to fight another day. I think that's what he means in the press statement which you read out earlier. I think he will live to fight another day. It is not, it was the largest FPO in this country, but of course he is banking on the, cash flows which the group has, and he says that the expansions will continue as planned, but the capital market strategy will have to be revisited for sure.
Stay with me, Saurabh. We're also going to be joined by other leaders from the Business Today team, the most watched coverage right through the day on the Adani story as well as the budget. But we've got some breaking news coming in. Siddharth Zarabi, Managing Editor, Business Today TV, is also going to be with us in just a moment. Let's take you through the big breaking information that we have as we continue to bring this big story to you here late on Wednesday night. Sources inside the Adani Group have just spoken exclusively to Business Today, and here's what they've said. Sources inside the Adani Group to Business Today have said Gautam Adani stands by his investors and has withdrawn this follow-on public offer. growth will continue, says Gautam Adani. He's confident of funding future growth. India's growth momentum to continue unhindered, says the chairman of Adani Enterprises. For Gautam Adani, investors are paramount, and this decision by the Adani Group basically insulates them from any potential financial losses by withdrawing the FPO. Gautam Adani says withdrawal will not impact existing operations and future plans, and the group will be focusing on long-term value creation. Is what we're being told at this point of time. I want to go across to Anand Adhikari, managing editor, Business Today magazine, who's also with us. Anand, we've just read out to our viewers, those breaking pieces of information that we're getting from inside sources in the Adani Group. We were talking about damage control and how this is a damage control measure as far as Adani Enterprises is concerned. But Anand, my question is, how much damage does this do in the immediate term, to sort of stave off the larger damage that the Adani Group is clearly trying to avoid?
The big, the fluctuation in the price, the FPO, was offered at, 300, 112 rupees. Now it has gone down to 2,128 rupees. Almost even today, we have seen a fall of almost, 28%. And, the decision, like the Adani Group has said, that will not impact, the existing operation and the future plans. But they have big plans, in the roads, airport, green hydrogen, data center. So this Adani Enterprises is like an incubator. And there were like 5 or 6, new businesses which they were funding. And they all are like, capital guzzler. If you look at roads, if you look at airports, green hydrogen, data center, and I'm sure, the expansion plan in these businesses will get impacted.
Saurabh, coming back to you on that, the repeated comment coming in from the Adani Group is that this is in investor interest. This has been taken, from a moral standpoint in order to protect, investor interest, etc. What do investors need to know right now? Because, clearly investing is not an easy thing for people to do. Institutions and individuals have invested. So what do they need to look out for now? Because this statement from the Adani Group says, they're looking at fund managers about, returning all those funds over the next few days. But what should we be telling investors at this point, Saurabh?
Yes, Shiv, that's a very important point you raise. Earlier in the day, during the course of the day when the bloodbath was actually happening in the Adani pack, we were discussing how, the hordes of new investors who have come into the market over the last couple of years are actually sort of witnessing this kind of thing for the first time, perhaps. This kind of bloodbath in a large group, one of the country's largest and storied groups. So, there is a lot more at stake, like I said. I think what needs to be done now, and I think he's done the right thing by calling it off, because a further rout in the stocks would have really dented the investor confidence of the people who have already invested in the FPOs. And as I said, these are large investors, these are big investors who have put in their money yesterday. And I think there is a lot more at stake than just the FPO. So what he's doing is he is trying to tell the shareholders, look, we have our plan. Not the end of the road. It's not the be all and end all. If it is called off, we will come back to you at some other point. But at this point, we are here to protect your money. You take back your money. We have our growth plans in place. And remember, the questions swirling around some of the allegations also are, continue to haunt the markets and continue to haunt the Adani pack. Even today, there was an action by Credit Suisse, which was again the real cause for today's bloodbath, really. So there are questions, there are doubts which the group needs to address. And I think it's the right call in terms of giving back the money at this point, concentrating on engaging with shareholders, engaging with large global shareholders, and telling them the real story. What exactly is the plan? What are the charges about, and how they are going to take them on? That is, I think, the priority right now. So the FPO was really not the most important thing, and I think Mr. Adani has done the right thing by calling the FPO off. It's a very bold move, like I said. It's a brave move, bold move. One, I think that should try and be the first step, probably, in restoring some of the pride back to the Adani Group. This was an important move and needed to be done.
Sort of that leads straight into my next question to you. Is Gautam Adani going to come in for praise as a result of this move? Is he coming across smelling of roses after taking this decision? He says it was a moral decision. It was an investor interest. So is he going to come in for praise for taking this decision?
Well, that's difficult to say, Shiv, because the questions continue to, some of the questions will be needed to be answered. But that the fact of the matter is definitely that he will be praised for the boldness of the move for sure among sections of the market. But at the same time, more than, is him coming smelling of roses, I think it was also a practical move. Like I said, this group does not need to now have another set of large shareholders suffering further losses. Let's be very clear. That is the critical aspect which needs to be protected. There is serious shareholder money, 20,000 crore of it, which needed to be protected, and that entire money, you cannot have further erosion of value in that. And that is probably likely given the kind of volatility which the entire Adani pack and particularly Adani Enterprises has been facing. So it is a practical move for sure. It is a bold move, and one that will definitely, do well for Mr. Adani's personal image in some sections of the market for sure.
Yeah, and that's the reason why moral decision has been is being pushed as a very strong reason why this decision was taken. Sort of last couple of questions. We're going to expand our coverage as well. Tomorrow all of us here in the newsroom have been counting on the big story. One of the big stories being that Adani becomes this huge flashpoint in Parliament tomorrow. My question to you is, politically speaking, this decision has been taken by the Adani Group. Does this decision by the Adani Group in some way take the sting out of the opposition's plans to, somehow ambush the government and sort of storm Parliament? Does it strengthen, Adani Group's own stand and kind of take the sting out of the opposition's attack, in your view?
I think, Shiv, you're right. It probably will be seen as a move that Mr. Adani and the Adani Group has got the moral courage and gumption to return 20,000 crore to shareholders, and that's not a small amount. In the interest of the shareholders, it is definitely a shareholder-friendly move in that sense, given the current scenario of the Adani pack and the stock, Adani Enterprises stock.
Okay.
So I think to that extent, it will be a positive move, and it will protect in some form, the negativity around it.
Okay, sort of stay with me. Also with us is Managing Editor Business Today TV, Siddharth Zarabi, whose team has, broken all of the stories on the big Adani coverage right here on India Today. Siddharth, your first opening comments on this decision that's been taken by the Adani Group. They've also spoken to your team just a short while ago, Siddharth.
Well, I'm sure that a lot has been said on this, so I'm not sure where I'm coming in on this debate. But look at it from a purely financial perspective. 3,276 rupees was the upper band, and at that price today, the price was 34% down in a matter of just one trading session after the FPO closure was announced. What the Adani Group has done is to try and restore and rebuild trust from a wider public markets perspective, because it is absolutely unprecedented that you buy something for, let's say, 3,500 rupees on one day, and the next day you suffer a 35%, one-third plus erosion on the value of your investment. And like this point that has been said several times, it was ultimately high net worth individual, family offices, a large Gulf fund that had come in and pitched in and helped ensure that the FPO of 20,000 crore was raised. Retail investors had given it a go by. Therefore, from an institutional perspective, there was absolutely no other right thing to do in some ways, although the financial consequences of this, the market consequences of this, will perhaps come out. A lot of market participants know this better, and we don't know which way the markets will open and treat this bit of news. But purely from a financial perspective, with this kind of erosion on an investment, pretty much overnight. Something had to happen. I think what Mr. Adani has done is he stepped up and said, okay, I'm taking this hit. I have taken a very significant hit over the last few days. This is one more, but it at least ensures that group credibility from a financial point of view will remain. But I must also add one point. I'm sure the investors themselves must have wondered and asked this question, perhaps, of Adani Enterprises itself, that hey, listen, we are also entities answerable to our shareholders, and they will ask us questions as to why there's been more than a one-third erosion in value pretty much overnight. And a combination of all of those circumstances has culminated in this, as you described, moral stand taken as far as this FPO is concerned, Shiv.
So Siddharth, Gautam Adani in the information that's been shared by Adani Group insiders with Business Today, he says, or they say, the withdrawal of this FPO won't impact existing operations and future plans. Is that largely accurate?
We must distinguish between a company's operations, which is a function of its sales, its profits, or the lack of it, and a company's market value as determined on a stock exchange. We have sometimes seen that share prices do not reflect the fundamental true value of a company. Many share prices languish despite the company is doing very well in financial terms and vice versa. So I would say that at a time of unprecedented lack of clarity and a black swan event in some ways for the markets, we must put this in two different baskets. The operational parameters, the ongoing businesses, the customer profile, just for an example, and again, this is only in response to your question, Shiv, and I'm trying to think of a response. The group owns Mumbai Airport. The operations of Mumbai Airport haven't stopped. Flights are landing, taking off passengers, and the revenue that accrues from flight operations is coming in. Similarly for their power business, and I can go on. So I would say that we must tread on this very, very carefully. Share prices may or may not always reflect the fundamental value of a stock, but a business and its operations are to be determined on separate parameters, Shiv.
Okay, Siddharth, stay with me. Very, very interesting information that Siddharth is bringing us. Also information that should be, of actionable interest to investors who are all tuning in and watching India Today right now, because we're the only channel, obviously, tracking this story. We broke it earlier today, and we're tracking every piece of information we'll be updating you with. Rahul Kawal, news director, is live with us. Rahul, go ahead. You wanted to ask Siddharth some questions on this.
There are a few very important aspects that everybody needs to think about. Nobody knows the answers for sure, but I want to get Siddharth's perspective on where the bottom of the Adani free fall could potentially be. Adani Enterprises at one time down about 35%, Adani Ports 25%, Ambuja Cements 19%, Adani Total Gas about 20%, ACC down as well, NDTV down as well. So there are two kinds of stock. One which had very high PE multiples, and the others which were seen as being good businesses, like an Adani Ports, was seen as a strong, sustainable business, but which is being hammered in this meltdown as well. Siddharth, we've been speaking to multiple market operators, and the one fact is that nobody knows for sure at this moment where the bottom of this free fall is.
Rahul, the withdrawal of the FPO is actually confined to the issuing entity, which is Adani Enterprises, and the stock price value erosion that it has seen. We saw in previous trading sessions that particular stock was in the green, and that's been described by the company as an incubator of sorts, while as other stocks suffered. While I answer your question, I must drive home this point once again. It's Adani Enterprises, which is the issuing entity, that got promises and money in the escrow account, which has done this following this steep erosion in value. To your question as to what is the ripple effect, and for other stocks, some of which are obviously in completely different lines of business, I think it's very, very tough to predict the bottom of a market. There are larger questions that the Hindenburg report raised, and all I can say is that the Titanic was breached by the tip of an iceberg, and there were sort of systemic consequences by just that one breach. I don't want to draw the same parallel here, but it might become inevitable ultimately.
The question, Siddharth, is that we saw what Credit Suisse did, and let me just try and explain that to our viewers. Credit Suisse essentially said that all their private banking clients, high net worth individuals, could no longer pledge Adani bonds as collateral to take money off it. So about 75% or so of whatever Adani bonds you held could be given to a bank like Credit Suisse, and you could take a collateral off it. They say, okay, we no longer take the Adani bond as a collateral. One is, after that, Siddharth, we saw ICRA in India come out and say, the Indian Credit Rating Agency come out and say that they still have faith in the Adani stocks and it's still AA+. Now the question is, will other financial institutions also potentially take a cue from Credit Suisse? Will that act as a leading indicator for others to do the same, or will that be a one-off, and will others, for example, we've seen in the UAE, some funds come out and say that we will back the FPO even if that was a higher price than the market price. What is likely to happen? How important is, because a lot of the meltdown that happened today, which then ultimately overshadowed what happened in the budget, started after that Credit Suisse announcement. Could that be a leading indicator for how others react?
Let me try and unpack several of the points that you make. The first one, for the benefit of our viewers, as I understand it in the simplest manner possible, equity allows you to go ahead and leverage it and take on debt. What we had seen till yesterday and till this episode earlier today, with the wire reports that were picked up and ultimately led to the market cracking despite what I would call a 21-gun salute of sorts to the budget by Finance Minister Nirmala Sitharaman, is that after the worries around equity, the over-leverage, the manner in which some corporate governance questions have been raised, it then fed into the bond market. And that's where, remember, equity investors many times, especially in the retail segment, sometimes just buy because someone told them to buy. The level of retail due diligence, as an example, in equity shares is nowhere near what bond investors do. And there is a domino effect that is triggered because there are levels, there are certain triggers, and there are certain, let's say, electrified fences, which if they are touched, send out alarms. The simplest way to describe what Credit Suisse has done is exactly that. And then if one sentry wakes up, everybody else around the perimeter does that. That is what is happening. Therefore, to your earlier point, Rahul, do we know where the bottom is? We were with Udyan Mukherjee through the day. There is no way, nobody who can call the bottom in any kind of market, and especially this one.
Okay, and the other big question is what happens from here? Ultimately, remember, on a channel like India Today TV, starting tomorrow when the Congress, the BRS, the Aam Aadmi Party start attacking the BJP and the Modi government, that becomes a lot of the center of attention. But that, from a financial market perspective, is frankly just noise. What is far more critical is what's happening internationally. And Siddharth, there, explain to our viewers what's happening. Because broadly, the Adani Group has been trying to reduce its dependence on Indian public sector banks and increasingly raise money from the international bond market. And that's something that they've done very consciously in a bid to reduce dependence on PSU banks. Now, the flip side of that is that this is way beyond anything, Siddharth, that you can control in India. Now, what the Credit Suisse, the JP Morgans, etc. think, they will think on their own, they will form their own view, and that is not something that can be controlled or determined basis the view domestically.
That's right. And let's step back to 15 days back. And 15 days back seemed like a different era when it came to the Adani pack. Nothing could go wrong with the stocks. Yes, a lot of questions were asked about the the valuations and the multiples enjoyed. There were also questions about the growth, the leverage, and the pace at which it goes. And let me say this for the record, there are other groups, including whose businesses have been under very significant stress, which have more debt than the total Adani combined. But 15 days back, it was very different. This was a group that went out and said, roughly around 10%, give or take a little bit, is what I am going to raise, and I have kick-started, and this is signal number one beyond just the headline amount. I have kick-started the process of debt reduction. Other large industrial empires have done it in India. Post-COVID, Reliance Industries did a very, very successful, a very, very massive deleveraging exercise. That was what Adani had started. And today, that process seems to have come to naught. And I use this word carefully, not in terms of expressing an opinion or a judgment, but the Adani Group is back at where it started whenever its board had decided to undertake this FPO process. This FPO is off. The debt remains on the book. But what has happened in the meanwhile is the spectacular market cap erosion. And a market cap erosion, if you are using your equity to raise leverage, is where the pinch will be felt. It's for those shares which are already pledged, and also for those shares which are not pledged. So can the group go ahead and raise funds again? Of course. Where will it do? I mean, no one can answer that. One of the Gulf investors who had put in $400 million or thereabouts in this withdrawn FPO has also been a previous investor in Adani. So we don't know who will ultimately put in money. There is a lot of money all across the world. But the challenges and the asking terms have now significantly changed. 15 days, 20 days back, a month back, when this prospectus was being drawn up, it was a different time. I am almost tempted to say it's almost like the cutoff that we saw pre the lockdown announcement and post that in economic terms, Rahul.
Okay, Supriya Shirne joined me at this time, and Supriya has two different hats that she dons. A, as a former business editor and somebody who's tracked the markets and understands the space from that perspective, and then somebody who now is a close aide of Rahul Gandhi, runs social media for the Congress. We're going to try and mix both of those as Supriya responds. A, the fact is that the follow-on public offer has been withdrawn, and Gautam Adani taking a high moral stand, saying he doesn't want investors to suffer. If the current price of Adani Enterprises is lesser than the market price, why make investors suffer? Let's call the FPO off. So he's done the big, bold, grand thing. The flip side, though, is that the budget is now over, the economic survey is stable, and this is where Supriya Shirne and her party then pull the knives out and then try and make an attack on the Modi government, because this is what Rahul Gandhi has been saying for a while, crony capitalism, etc. And do you see that sustained? But you also know, Supriya, from your past capacity as a business journalist, that what happens in Parliament is only tangentially consequential to what's happening in the money market.
No, actually, farthest from the truth, Rahul. I think what happens in Parliament has great significance for the money markets and also for the bond markets. And what's happening with the FPO, and it's quite unprecedented in the way, and I disagree with you. I don't think this is a moral high ground. I think Mr. Adani is caught in a web of, I think regulators in India will have no choice but to act against this company and the group. And quite frankly, I think I am not so worried about the FPO being called out. I want to raise a larger point. What made SBI and LIC invest in the FPO, despite the fact that the group shares were down, there was a carnage in the market, there was absolute sell on these stocks, and what was the whole business of SBI and LIC investing in this FPO? I mean, both these institutions, for all practical purposes, have the largest exposure as far as the common people of India is concerned. I mean, LIC's line is Zindagi ke saath bhi, Zindagi ke baad bhi. And every common man in India believes that once their money is in SBI and LIC...
That qualifies as per our investment mandate. And we came in at 30,000 crore rupees as our total investment corpus. We made more than 50,000 crore rupees from it. That's a good investment. Why is Supriya Shirne trimming?
What are you even talking about? I mean, here is a group which is, there is a sellout from that group. It's under carnage. Look at the stock performance of group companies in the last 4 trading sessions. It's a bloodbath for Adani. And what makes LIC and SBI invest in these, in an FPO like this? This is, I think, if you ask me, while institutional overreach should happen as far as Adani shares and Adani dealings are concerned, I really think it warrants some kind of a probe into why did SBI and LIC take exposure in such risky assets. I mean, Credit Suisse is bailing out its bonds on Adani, and SBI and LIC are investing in these stocks. These are institutions that have stood the test of time, and here you are exposing yourself to something as toxic and as risky as the Adani shares right now.
Now, there are 2 ways of looking at it. One, as somebody who's handling pension funds, LIC ought not to be entering into stocks where the float is so limited, given that domestic mutual funds also haven't entered the Adani counters. Therefore, the LIC is making a decision which would, like, for example, a Canadian pension fund would never do something like this. But the counter is, which is what we saw so clear from LIC in that statement that they put out, that they came in, it was investment grade as per their investment mandate, and they've actually made money. If they came in at 30,000 and they got 50,000 crore rupees out of it, then that's a good investment. I mean, who's to question there to crib? If LIC, if it fulfills the investment mandate of the insurance company and they've made money, then why is the opposition cribbing?
I'm not the opposition cribbing. Let Mr. LIC explain that to its, shareholders. Let LIC explain that to its minority shareholders as well as its policy holders. Where does LIC's money come from? LIC's money comes from India's policy holders, and they have no business investing it so recklessly. I think it's a reckless investment, and I say that with a hat that I used to don earlier. If you have 100 rupees in your account today, Rahul, will you invest it in Adani stocks even if you were getting them cheaply? There is a huge downside risk to Adani. Has the risk been stemmed? I mean, in stock market language, the downside risk is too huge for anyone to invest. And I see no reason why LIC, as a government insurance giant, that its corpus is policy money that comes from from people who earn minuscule but put money in LIC with the faith that it will be safe. You've shattered that faith today. It is not on.
Supriya Srinath, thanks for speaking to India today. We're Rahul Kamal is going to be joining us back in just a moment. We just dropped that line with him. Siddharth Zarabi continues to be with us. Siddharth, the big question now is what next? Will there be, another, Adani FPO when things are more stable? What does the road ahead for Adani look like as far as raising funds is concerned?
Well, that's a point that we picked up, and I'm glad you raised it, because that's really the fundamental question. And while it's easy to be tempted to get into a sort of opportunity to throw stones all around, frankly, Shiv, and reporters like you and me, it's not our job to call the price levels of stocks. We can always talk about the risks and the news flow around it. In terms of the news flow, Shiv, it's very clear, and I say this again. If investors who have stepped forward to invest in the Adani FPO, long-standing business relationships, I would imagine, several of them, I think the point that Mr. Gautam Adani has driven home is that he is conscious about their loss, and he is therefore taking this hit, a pretty significant one. But the group needs to deleverage. I'm sure the board of the company, its directors, will take that call. But it's very clear that the fundraising environment that existed, just a week ago, frankly, Shiv, has fundamentally changed. Has it changed forever? Are the doors shut? Absolutely not. That's not how markets function. Markets go up, they go down. Volatility is a part of daily market life. I imagine the board and the company, its founder, promoter, will all be grappling with those issues even as we speak, Shiv. I think it's a big matter, and if I would say, it's an existential question that they have to resolve.
Very important point. Rahul Kamal is back with us. Rahul, a question that we were talking about a short while earlier, and I wanted to ask you that because the politics is going to continue. It doesn't look like the politics over Adani and Hindenburg research is going to slow down when Parliament resumes. My question to you is, considering that this has been crafted and proposed as a moral decision by the Adani Group, will Gautam Adani come in for some praise?
I think at this time they're trying to cut their losses. They're not looking at praise. He's playing the longer game here, saying that we can ride over this storm. Yes, valuations will take a hit in the short term, but in the long term, as Siddharth was saying earlier, there are real ports, there are real airports, and these are real businesses, and that the cash flows will come in because the infrastructure, the investments have been made, and that they're recurring businesses from where money will come in. But you know what, the point, Shiv, that Supriya just made is at the nub of this debate. There are two ways of looking at it. Would, for example, a Canadian pension fund come in and invest in a group like Adani? The fact is that domestic mutual funds have stayed away from most of the Adani counters because the promoter holding is so high, very close to 75%, and for our viewers who don't track the markets very closely, 75% is the maximum that a promoter group can hold in a particular counter. If you go beyond 75, you get delisted. And therefore, and many of the stocks, we'll just have that out on our screen right now, are very close to 74. And what Hindenburg alleges in that report that they put out is that in some of these stocks, there are related parties who are acting on behalf, allegedly, of the Adani Group, who actually take the promoter holding beyond 75%, and therefore they are arguing that some of these stocks should actually be delisted. So now you've got the LIC coming in, making this defense that this is investment grade, it fits our investment mandate. It doesn't matter what domestic mutual funds are doing or what the Canadian pension fund would do or any other global pension fund would do. We've done what our mandate allows, and we've actually profited from it. Let me get Siddharth to answer on it, because you've got the LIC coming out, putting out that statement, justifying their investment in Adani counters, and you've got the likes of Supriya and others in the Congress who say, for an insurance company, given the mandate they have of guarding people's pensions, to invest in a stock or a group of stocks where even domestic mutual funds, which are on the equity side, which are supposed to be more aggressive in their investment mandates than an LIC, if they're not willing to invest, then what the hell is LIC doing? How do you respond to A, what LIC has said, and B, the argument that Supriya has made?
Every institutional investor has his own mandate, which is determined by the board of the company. Let's take an example of funds from a certain part of the world, the Nordic world, for example. They lay a lot of stress on clean energy. They do not invest in anything what is within brackets really so-called allegedly dirty energy, coal, on which India is completely dependent. Yet you have Chinese companies which go in and invest and strike great bargains. Investment decisions are decisions of the board of a company, regardless of its ownership, whether it is public or privately owned. There is no regulatory mandate, at least in India, where you are supposed to invest or not invest. You have to follow a certain set of principles. There are various norms that you have to adhere to. To your specific question, what would an investor be thinking about right now? The bottom line is to protect the value of the investment. And like we have on our platforms on Business Today TV, on India Today, kept saying, it's very easy for people to jump to conclusions and say, losses, losses, losses. I sometimes get the sense this is almost like a 2G or a coal G kind of hype that is sought to be created. Let's step back from that. The fundamental point is, what does Gautam Adani do? A process of deleveraging, a process of reducing debt. That process, the first major attempt in some ways, has completely come around. This would also, Rahul, Shiv, lead to another sort of conclusion at this stage, which could change tomorrow, but basis available information. Please look at the Adani acquisition strategy over the last 6 months alone or 1 year alone. In this kind of environment, I'm sure the board of the company will now perhaps pause. It's taken on a lot of new companies across sectors in its hunger for growth. I guess it will also now start to diet a bit.
So, which isn't necessarily a bad thing, given that there may have been a certain amount of froth on top of the Adani counters. That froth is gone. What you're left with at the end, which I think is the point that Mr. Adani is making, and I've had the opportunity over the last several months to meet him for several hours over multiple occasions. Here's a man who's playing for the long term. He's not thinking about today or tomorrow. Like the Chinese in some ways, he has a long-term vision on the India story, his belief in the India growth story, and his belief in aligning a lot of the projects of the Adani group to the larger infra place. India grows at 8 to 10% in his estimate. He thinks he can grow at 18, 20 plus percent, and that's really the play he's making. So in the longer term, this could potentially just be short-term volatility from the Adani group perspective. That's what Gautam Adani would bet on. He's a fighter. He's a first-generation entrepreneur, as he says very proudly, and he said so in public in that interview we did for India Today magazine recently when he was the Newsmaker of the Year. The flip side, though, is that this Hindenburg research report now leads to far greater scrutiny. And a lot of what was being not necessarily permitted, but just looked away from, or people were okay with previously, now comes under scrutiny. And that's the point I think that Siddharth is making, that every single move in terms of fresh acquisitions, in terms of new growth opportunities, everything comes into. So from being in a highly growth-oriented phase, Siddharth, they'll have to now potentially cut their losses and come into a consolidation zone where you're consolidating what you've already picked up rather than continuing to go out boldly, trying to buy ACC, Ambuja Cement, etc., which they've been doing in the past. They were taking bigger, bolder, more audacious bets than the other business groups. They'll actually have to, from Surya Kumar Yadav, start now batting like Rahul Dravid.
From what we have seen of Mr. Adani's business strategy and his ambition, it's very clear that perhaps he, like many other businessmen all across the world and in India, would like to be number one in every sector that they operate. And we have seen this feature in conglomerates, that one success leads to another, and there's a bit of self-confidence and belief that drives those business decisions. Slowdown is sometimes not bad. It allows the company to recalibrate. But the point that really keeps coming to me, Rahul, and this is slightly on a tangent from what you said, I was just thinking through in terms of the timing of this statement on a day where after that report, the market cracked and the stocks cracked as well. I think within hours for the company to take this call is also a strategic decision to, in some ways, stem, a death by 1,000 cuts when it comes to damaging news with some of these institutional investors, of which, by the way, for the record, although certain names were bandied around, we do not have authoritative final statements of who were actually all the investors, the specific amounts. There's been a lot of speculation. I'm not going into that. Imagine some of them coming under pressure from their shareholders, then having to fulfill regulatory disclosure requirements, and that news coming out. And that would have kept happening. And imagine the loss of confidence. So purely from a damage control point of view, I think it's a smart one. Late today on budget day, in fact budget night, and looking towards how the markets will open and behave and respond to it tomorrow. very tough, Rahul, very, very tough to say how the markets will treat it. The smart investor will realize that this is a course correction, this is an acknowledgement, and this is also in some ways opportunity for the group and its management to come up with a new strategy because the old playbook didn't work. But there will be a lot of people, Rahul, who will be very worried. They might panic. They might just want to rush towards the door. And as they rush, they will knock over chairs and tables and flower pots and lead to perhaps some more carnage on the street tomorrow and day after.
Thanks, Siddharth. Here's what I wish to say, Shiv, in conclusion. To my mind, what happens in Parliament, despite what Suppression is saying, is really just a sideshow. That's more noise than signal. The signal really will come from what happens in the bond market after what Credit Suisse has done. Will other financial institutions follow Credit Suisse's lead and say, we don't think of Adani bonds as being as potent or as investment grade as we thought earlier? And if that does, that is what truly hurts and that is what truly matters. If Credit Suisse is a one-off and we saw, for example, UAE-based investment firms come out and say we will go out and invest in the FPO even if the price is higher than the stock price of Adani Enterprises at that moment, then this is short-term volatility which the Adani Group will sail through. If, however, other institutes start doing what Credit Suisse has done, then there is a potential that the loans that have been taken by different Adani Group companies will come under question. And we have that data set, if our producers can pull that out, about the current ratio, which is essentially current assets to current liabilities, of which essentially explains how much liquidity, how much easily available liquidity do the Adani companies have. And in several of those stocks, as is visible from the Hindenburg report and even otherwise, the current ratio is less than 1, which means that there may be a struggle for immediate liquidity. Now remember, the explanation from the Adani Group is that because we are investing in the India infra story, because these are long-term infra projects with a long gestation period, which is why you don't have immediate liquidity, but if the loans get called in, then you need liquidity. So that could potentially be a cause of concern. Now, what you have on your screen right now is the net debt to EBITDA ratio, which is the earnings before interest, taxes, depreciation, amortizations is really the way at which you look at how successful or profitable the business is. Their ratios are higher than industry averages, but Gautam Adani and others around him would say, we've been able to bring this down. Our debt is our leverage is coming down in comparison with the past, so they're heading in the right direction, which is why that FPO actually came as part of that larger plan strategy to give retail investors a chance to enter into Adani Enterprises. Now that is being called off. So there's a certain amount of volatility, a certain amount of uncertainty, and the entire team, Shiv, at India Today and Business Today, will be tracking what happens very, very closely. If anybody says they know for certain what's happening, they're lying to you because no one does. But the fact is, this is a very volatile, very dynamic situation. Nobody should write Gautam Adani off. He is, in his generation, the most ambitious and most audacious entrepreneur of the entire lot. Now, he's also dealing, make no mistake, with the biggest challenge of his life. Will this be a short-term challenge which we'll overcome, or will this become something much bigger which raises long-term questions about the success of the Adani Group? Those are questions that will be known in the days to come. But remember also that a lot of these businesses, the ports, the airports, the other stuff that's being built, exist as real functional businesses on the ground. When you look at that graphic which our producers put on the impact that the Hindenburg research report calls had on other businesses like Nicola, for example, those stocks came down by 99%, but a lot of them were new age tech kind of concepts which didn't exist in reality, where companies were claiming much more than the product that actually existed. In the case of the Adani Group, a lot of the ports, the airports and everything else they've been working on exist on the ground as real businesses. They may not be worth what the stock market thought they were worth. That valuation may take a tumble, But those
Yeah.
assets exist on the ground. Those assets will create value. They will create cash flows, and they have a certain shelf life. So this is a very, very important story, and Shiv will track that very closely.
Rahul, appreciate it. Thanks very much. Remember that Rahul, the Business Today team, and all of us here on India Today will continue to track this huge story, the biggest financial story of the moment, broken here on India Today. All of that inside information scooped, as always, first on India's #1 channel. Thank you, viewers, for your viewership here on Budget Day. But the bloodbath on Dalal Street is likely to continue. The volatility, the uncertainty, and the many exploding questions will be our chief focus overnight, as well as first thing tomorrow morning, when we'll have fresh updates on the situation as far as Adani is concerned. What's going to happen, the political impact going to be in Parliament, the first reactions from Hindenburg Research and investors across the world will be first. I guarantee it here on India Today. Thanks for watching India Today's coverage. The big stories always first and most watched here on your channel. We'll see you at the same time tomorrow and through the day starting 7 a.m. Thanks for watching.